Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thanks so much for coming on today.
Good afternoon, Devin.
Well, the event of the week, Professor, the Federal Open Markets Committee meeting and what the Fed decides to do with interest rates. The consensus seems to be a rate hike of 75 basis points, but with so much uncertainty, it's been a rough several sessions for global stocks. What's the story in the markets today?
U.S. stock indexes had a mixed situation Tuesday, a day after that the S&P 500 slid into a bear market on fears that red-hot inflation will prompt more aggressive rate increase from the Federal Reserve. The S&P 500 fell about 0.4% on Tuesday, while Dow Industrials were down 0.5%. The tech-focused Nasdaq Composite was up 0.2%. As of now, all eyes this week will be on the Fed's interest rate decision on Wednesday, with the officials considering a larger than expected 0.75% point increase. Previously, U.S. inflation on May was announced as 8.6% on year, which is the highest in 4 decades. In Asia, major benchmarks were mixed between China and Japan. The Shanghai Composite Index and Hong Kong's Hang Seng Index added 1.4% and 1.3%. But Japan's Nikkei 225 edged down 1.1% today.
Well, the KOSPI here in Korea down again today significantly. It broke below 2,500 points yesterday. Now we're about the lowest since late 2020. Virtually all the big names closing lower today. One of the hardest hit sectors today was entertainment, it seems, because of the news that BTS are taking a hiatus from their work. Well, tell us about the local market, Professor.
Today, domestic markets were much affected by U.S. Fed's possibility of giant step or a 0.75% key interest rate hike. The benchmark KOSPI dropped 1.8%, and also KOSDAQ lost 2.9% today. So, including today, domestic markets continued 7 straight days adjustment to downside. Domestic market participants are confused between positive signs and negative signs from the market. But as of now, it is true that the domestic markets will be dominated by U.S. super high inflation and Fed's aggressive interest rate hikes several more times until next year. In KOSPI market, foreign investors net sold 469 billion won today. Most of the large cap stocks also dropped today. For example, Samsung Electronics dropped 1.9%, and the second largest cap, LG Energy Solution, also dropped 1.5%. But Samsung Bio gained 0.8%, and Hyundai Motor also gained 1.5% today.
Well, with the expectation of the Fed doing this so-called giant step, the Korean won is very high right now, the exchange rate that is, at around 12.90 to the dollar. This, to put it into perspective, is the highest it's been since the global financial crisis. What do you see happening with the currency and its weakening? Will rate hikes in Korea provide some relief?
If we take a look at foreign exchange market, there are 2 strong and fundamental factors that intensify U.S. dollar's value against Korean won. The first is fast and aggressive U.S. Fed's interest rate hikes. That makes U.S. dollar-based assets more attractive, and then investors buy more U.S. dollars, which intensify the value of U.S. dollars in the end. And the second factor is that investors demand more U.S. dollars, which is a safe haven asset as global economy declines. For example, OECD cut its global economic growth for this year from 4.5% down to 3% level. So the possibility that $1 exchange rate goes up beyond 1,300 won per dollar became very high.
Right. And finally, Professor, Korea actually has a trade deficit for the year so far, for the first time since the global financial crisis. And so it's not just inflation risk. The economy is highly dependent on trade. And to top it off, government spending in the pandemic has the government in a deficit, too. What do you make of these so-called twin deficits?
Yes, there's no question that Korean economy's export has been the strongest momentum to recover Korean economy after the outbreak of a coronavirus pandemic in 2020. But it looks that the twin deficits in both trade and government expenses are unavoidable for this year. Amid steep rises in consumer prices, interest rates, and U.S. dollar, Korean economy faced twin deficit in its fiscal and trade balance. Korean government drew up an extra budget proposal estimated at 34 trillion won, including a cash handout of 6 million won each for some 3.7 million self-employed people hit by pandemic. This program will be financed by government debt or bond sale. Also, Korean government expects this year's budget deficit amounts to about 110 trillion won. And also, as of May 10th, for example, the accumulated trade deficit ballooned to nearly $10 billion this year, up from around $8 billion a year earlier. This trade deficit is much, actually, as we talked about, generated by weakening Korean won or rising $1 exchange rate.
Yeah, it'll be a big deal if that comes in a deficit for the whole year. We'll have to wait and see. Professor, thanks so much for sharing your insights today with us. We appreciate it, as always.
Thank you very much, Devin.